All right, an earnings alert now. Shares of Lululemon, check them out, down 9.5%+ after reporting earnings. Yahoo Finance's Josh Schafer with us now to break down the numbers. Josh, what is moving the stock so far down?
Yeah, Dave, it looks like right now, so you got a revenue beat for Lululemon. The estimate was at $1.6 billion versus an estimate of $1.82 billion. And the diluted earnings per share beat the estimate as well at $2 versus an estimate of $1.97. But I think really what you're looking at here for what's bringing the stock down is the fourth quarter guidance for EPS. So Lulu's guiding $4.20 to $4.30. Well, the street was expecting $4.29. You can see that's a pretty big range there. Didn't quite hit it there. Now, they did have full year revenue numbers coming in as well. That came in at $7.94 billion in a range to $7.99 billion. That was the high end of Lulu's previous guidance. And same with their full year EPS guidance. That came in at $9.87 to $9.97. That's also higher than Lulu had previously guided. And I will read you just a little nugget here. We don't have the call yet, but CEO Calvin McDonald said that they're pleased with their early holiday season performance. Expect to hear a little bit more about that on the call. Obviously, the holiday season will include Q4, Dave. So it'll be interesting to see. One other note, too, that I forgot for you. I think it was 85% inventories up year over year again. So another story there. That's the same as last quarter. Still maybe a problem for them. It wasn't really last quarter, but we'll have to see.
The inventory story continued to spread all over the retail sector. For more on the earnings, we're joined by Janet Joseph Kloppenburg of JJK Research Associates. Nice to see you. Your reaction to this report and why shares are down so far.
Yeah. Well, I disagree a little bit with the first commentator. I think the shares may be down because there was a gross margin miss in the third quarter. We thought that gross margins would be within guidance of down 50 to 70, and they were actually down 130 basis points. The CFO Megan's comments were that we're operating, quote, in a dynamic environment, which may imply that there were some freight or supply chain issues. I don't think it's a markdown issue, but that's always a possibility. And so the operating margins came in at about 19% versus 19.4. The guidance were for them to come in at 18.7 to 18.9. So a good beat on sales, which helped to leverage the SG&A more than we would have expected. So we're happy with that. And the EPS came in at $2 versus the street at $1.96. I think maybe the whisper might have been a little bit higher because we all knew that the top line had good momentum. Also, looking forward, the company brought revenue guidance in line with the street, at the high end of guidance in line with the street, and also EPS at $4.30 at the high end of guidance for fourth quarter versus the street at $4.29. So a smaller raise than expected, but the full year is up close to $10. And I think that all in all, there's probably some aberration that impacted the gross margin in the third quarter that may be continuing into the fourth quarter, and therefore didn't allow the upside for the third quarter that the street was expecting and a lift to fourth quarter as high as maybe people were expecting. I think we'll learn more as the company talks, but I was encouraged by the CEO saying that the fourth quarter began on a good note.
And Jen, I want to ask you a little bit about inventory. Second straight quarter that we've seen a pretty high number there for Lulu, up 85% year over year. What do you make of that number? Do you see it as impactful moving forward?
So the street's been concerned about Lulu's inventories all year. Clearly in their second quarter transcript, they said that their second quarter ending plus 85% inventory would be up at least that level, if not higher, coming out of the third quarter. So they were up 85, which was at the lower end of what they were guiding to. And that's because the company brought forth a huge amount of holiday product early to make sure that they were ready for the strong demand, which we're witnessing here with their sales up 28% in the third quarter. And that by the end of the year, this is what they said three months ago, that they expected inventory to be up more like 50 to 60. So I think we're going to hear the CFO tell us that the inventories are exactly where they expected them to be. They're certainly in line with guidance, and that by the end of the year, we're going to see a markedly lower level of inventory. That should calm people down, but I was expecting a very high inventory number.
What's your read on Black Friday? Look, most have been dramatically marking down products, has rarely, if ever, been the case for Lululemon. And just following up on your comments about the earnings call, what primary question would you like answered?
I think for me, well, it's a two-part question. First of all, I think on Black Friday, Lululemon was one of the winners, and there were a lot of great winners. I think brick and mortar traffic was terrific on Black Friday. There were a lot of promotions, but they weren't higher than they had been earlier in November. And overall, I think that the promotional environment is in line with where we expected it to be, and we're not seeing a dramatic slashing in pricing in the first 10 days of December. So I'm pretty happy with what I'm seeing. I think there's going to be clear winners and clear losers in the holiday period. Lulu is obviously in the winner camp. As far as disappointment for Lulu goes, I am surprised by their gross margin for the third quarter. We've not seen this trend, and I'm sure the company will have a good explanation for it, and I think the stock will recover.
They have proven awfully resilient over the last several years, with maybe that notable exception of when the pandemic just struck. Janet, Joseph, Kloppenburg, we appreciate you. Josh Schafer, good to have you here as well. Thank you both.